Hey everyone, good morning. It is half an hour before the market is about to open on February 26th. I apologize that I wasn't able to do the video on Friday or make it up over the weekend. But the good news is that on Friday, we basically didn't go anywhere. So there wasn't much change in the markets. So we'll see how we're opening up this morning and we'll do a thorough look at everything. So over here, let's take a look at our futures and flat, nothing to be excited about. We are slightly up, but that's all random movement. If we look over on the pre-market, we did start getting some direction in the pre-market about an hour ago. We started moving higher, but that has since in the last few minutes flattened out. So there is a bit of enthusiasm in this market. I don't really expect it to go anywhere given that we made that all-time high and we had Nvidia earnings that pushed us up to that all-time high. The market at the very least needs a pause before it can really start moving significantly higher. So, and actually it really needs a pullback before it's going to be significantly higher, but it does need a little bit of a rest, even if it's just going to creep higher. So let's take a look at how we look on a daily basis, and then we'll take a careful look at the sectors, momentum, and everything else in the markets. The S&P 500. So we imagined on Friday morning that we might hit this psychological resistance and get stopped out by it, and that's exactly what happened. So we did make a new high, and our high of the day was 510.13, so just barely hit that psychological resistance, moved a tiny bit above it, but really it's a zone. It's not this exact level. So we are at that psychological resistance, and we have pulled back. And today, at least this morning, it looks like we might creep a little bit higher from the previous close at the open. But again, we have to really see if we can get above this psychological resistance here. So if I go over to this chart, we can just at the highs of the previous session was exactly the psychological resistance. So we'll just throw that right there. We need to really move through that with momentum in order to get beyond it. Now, on Friday, there were a few reasons why we believed that that psychological resistance would likely hold, and we'll want to see if those reasons are still in place. So if we do hold, then we really are starting to chop sideways like we believed that it could. Well, one of the most likely scenarios was that we would chop sideways. The other was that we'd come back and retest this uptrend. It was unlikely that we would move up beyond that psychological resistance on Friday. And so far, given the muted open in the futures or the muted status of the futures and what is going to look like that is going to be a muted open for the equities, it's looking very much like Friday. It's looking like that psychological resistance might hold. Now, we could easily get surprised during the day. Buyers could suddenly come in. However, one of the things that is going to lead me to believe that we're going to continue chopping sideways or come back down towards this uptrend line right here is the number of CEOs. So last week, AMD's CEO sold 20 million in shares. The previous week, Amazon CEO sold however many shares. In the last couple of weeks, we've seen like 4 or 5 CEOs of major large cap stocks sell millions and millions of shares. So if those guys are starting to unload their shares, then we're probably nearing a top. So far, the market hasn't been too excited about that. It's just been going higher despite that. But these guys are pretty good at feeling out the markets. Now, there's always a number of reasons why an insider might sell. And only one of those reasons is that they believe that the market might turn around, or at least the market for their stock might turn around. But given everything that we're seeing in the broad markets, it makes sense. It's just another reason for us to believe that this is beginning to top out. Let's take a look at QQQ. QQQ, very similar. We went higher. We hit this all-time high. We went a little bit above the all-time high and pulled back from it. So it looks like we might be coming back towards this uptrend line right here, or the EMA 20. And we don't have as much distance from that uptrend as we did with the S&P 500. So right now, if I was going to go long, which since we are still an uptrend, we should still be pointed long, but we would be very, very careful with our sectors, and we would avoid the ones that the QQQ represents, which are the discretionary and tech mainly. They have a few others, but the bulk of the market cap is in those two sectors. So we definitely want to avoid those, but we'll look at that a lot more carefully when we take a look at sectors. Dow Jones all-time high significantly. So 2 days in a row was significantly above that previous all-time high. So, but also pulling back potentially. I guess I shouldn't be looking at this green line. Sorry, that's okay. So I shouldn't look at that green line because that's not a real level. So all-time high of the three sectors, Dow Jones looks the strongest, which would make sense if we're moving away from higher risk sectors and going into a little bit more defensive sectors. So again, we really want to pay close attention to the sectors today. So let's go ahead and look at actually before I do that, let's look at our TLT. Let's see what bonds did. Bonds bounced up to its EMA 20. So it looks like we're chopping. So here we went down, up, down, up. So as long as this purple line is holding, we're fine, because we're not going to get much pressure from bonds. But right here, it looks like we're also in a range. So I'll draw another line. Looks like we're range bound over here, and we're chopping sideways. So the bond market is just saying, hey, let's wait and see. We've got the Fed telling us that we're not going to cut for a little while longer, and we've got this equity market that seems like it's going to be topping out. This could be a little bit of a flight to safety, because this is against the direction of what we've seen before, which is if rates come down, then we would expect this to go up, but they're not coming down. The Fed said they're not going to cut rates. So we would expect this to either chop sideways or come downwards. Now, this is still in a range, but that's a pretty big bar compared to all of these bars right here. Maybe similar to that one and that one, but this is a lot of action right here. So the only thing I can think of that maybe might be happening right here is a little bit of flight to safety, a little bit of money moving out of equities and going into bonds. And that is another reason for us to believe that we're topping out in the markets. Now, this single bar isn't enough to draw that conclusion. It's just a hint of a suspicion. So if we start moving up and start challenging the MA200, MA50, or even breaking out of them, then that would be a lot more confirmation that we might be having a flight to safety into bonds right now. We'll see. We'll see what happens today. So far in the pre-market, it is a bit higher, so it doesn't look like that EMA 20 is going to be a challenge today, at least not at the beginning, the first couple hours of the markets. Take a quick look at the Fed Watch tool, just because it's still relevant to the bonds. Okay, so no change on that March. And May a little bit lower. So continuing to move a little bit lower at 21%. I think we're at 22 and change percent on Friday. So let's take a look at those sectors, because that's going to be most important, or 90-day highs, 90-day lows. This is very similar to last Friday, where we said we had a little bit over 400. We had like 455, I think, making 90-day highs, and a similar in the tens, making 90-day lows on Friday. And I explained that when you have 400 stocks making 90-day highs and are all 400 of them going to be able to make 90-day highs again the next day, and then again the next day, and again the next day. Obviously, there's going to be a whole bunch that drop out. And so unless those weaker ones start making 90-day highs, but they're weaker, they're relatively weaker. So why weren't they making 90-day highs the previous day on the day that these 394 were? Why didn't they make 90-day highs? Would we really expect them to then subsequently make a 90-day high when these guys are moving lower? And the answer is no. So this is an extreme number. So we really expect it to move down, and we did see it move down, but not significantly, not a lot. I mean, 60-ish stocks. Yeah, 60 stocks that didn't make the 90, continue to make the 90-day high, which is definitely less, but it's not hundreds less. It's still tens less. So there's still a lot of room for us to not make 90-day highs. And if we don't make 90-day highs, if we don't have a significant number of stocks making 90-day highs when we did have a significant number in the past couple of sessions, that's going to mean that the S&P 500 is going to have a very hard time. It's not going to be able to make a 90-day high itself. And it's making all-time highs, but all-time highs are also 90-day highs. We're going to have a lot of trouble making a new high today. Its psychological resistance is looking like so far that it is probably going to hold. And then if we'll see if it not only holds but causes us to pull back towards the trend line, then this week, if that happens, then this week it looks pretty likely that we might challenge this uptrend, the EMA 20 or this uptrend line. And then if we break through, then that's the first stage of changing of trend. Doesn't confirm the changing of trend, just like QQQ. This did not confirm a change of a trend, but it was the first sign of the possibility of a change of trend. So we don't want to confuse that. We want confirmation of a change of trend, which would be breaking below, making a new low or a lower low, and then coming back up, perhaps or usually near or to the uptrend line. And then that would be a lower high if it bounces back down off of it. So that's what we're looking for a change of trend. And it's looking like that we might get signs of that later this week. And sectors. Yep, wrong one. There we go. Let's see, on a 1 week basis, that's what we've been looking at. We're all jumbled up. We've got the semiconductors up here with staples and healthcare, which are defensive. We've got materials, which is somewhat defensive. And then we've got home builders, which is speculative. And the rest of the technology and communications and real estate are way down here. So we've got extreme separation. That is a sign of overstretched markets. But what we really care about is we're still in an uptrend. So we want to be in the stronger sectors. And right now, we can't really rely on the order of sectors to tell us what is strong right now, just because we're at such extreme levels in the markets, highs in the markets. So what we want to do is actually look at the charts. So XLB is looking a little overstretched, but it's looking good, but overstretched. So it needs to pull back. If the market pulls back and then changes trend, this XLB will pull back, but not necessarily change trend. So we would want to be careful with the timing in something like XLB. XLP is looking good. Same thing applies to XLP, but not as extreme, because this is huge bars upward, and it's not really parabolic, but the slope on the EMA on the slower or the faster moving averages is pretty extreme. This is over 45 degrees on that EMA 8, which is rare to see, and 45 degrees on that EMA 20, also rare to see. So of course that changes with your scale. If I stretch out my timeline, then it's a lot flatter. But I'm only looking at these this week right here, 1 to 2 weeks. If I just narrow in on that timeline, that's an extreme move upwards. So that could pull back. This is more gentle. It also is somewhat extreme, but it's more gentle than that XLB. And then XLV is looking at excellent, nice and steady movement upwards. When we had that CPI drop associated with the right here, on Tuesday, February 13th. Okay, right here. So basically all it did was chop sideways and move down a tiny bit to its EMA 8 and kept on going. So XLV is very strong relative to the market. This one's looking very, very good. I wouldn't mind XLB. XLF is a very similar. That's the 13th. Yeah. So I'd be, but it's starting to get a little bit away from its EMA 8. But, so XLV, they look the same. So I would definitely favor XLV and XLF to the upside. And then if I wanted to balance out a sector, a weak sector against it, to have a little bit of a hedge, then let's see if we have any not great looking sectors. XLU is not looking great. XLE is chopping sideways. XLU looks like the worst sector. So I would perhaps balance it out with what's inside an XLU or a utility stock, a weak utility stock. But so far, all of them are still on the stronger side because the entire market is on the stronger side. Let's look at momentum. Do we have time? Just to spend 2 minutes and look at the momentum real fast. Okay, so we're still about 51% above the 50-day moving average for all stocks trading at least $2 in the markets. So that hasn't really changed much over the last week. And then let's look at market performance. In the S&P 500, we've got 66. Okay, so actually went a little bit higher, if I remember correctly. In our Dow, we've got 70, so it's moved higher. NASDAQ 64. Let's take a quick look at these charts. And MEX. So we dipped down here. We popped up a little bit. We're saying that this was an extreme, and within 1 to 2 months, we get down to about 30s and 40s. So we're looking a lot like this one, where we came down, we popped up a tiny bit, but it didn't matter because we continued downwards. So according to this is month by month. So according to this pattern right here, in the next month, we can expect the number of stocks trading above their 50-day moving average in the S&P 500 to drop down to 40 to 30, maybe even 20%. So that would be the pullback that we're looking for. So this is telling us in a 1 month time frame that we can expect that pullback. Over here, we're saying that this week, we could get the first sign that that pullback is happening. So in that 1 week to 1 month time frame is we really want to be careful if we start to approach this uptrend that we might get that change of trend. And we'll watch as we get, especially as we get to this uptrend line, we want to see how sharp the drop off is of stocks going below their MA50, because that'll tell us how quickly we approach the MA50. And if there's a whole bunch that are still going down, then we will break below that MA50. So we can take a quick look at RSP. RSP is looking good, doing well. So the equal weighted, we were chopping sideways, but in the last week, we got a little bit of an upsurge. So we got probably what we were talking about last week is when we got that NVIDIA earnings, it didn't just affect tech. It was actually affected other sectors more than it affected tech. If you don't remember that, just go back to the videos last week. So this is showing that in the chart. So when we got those NVIDIA earnings, even the non-tech or other stocks, all stocks kind of got pulled upwards. So that's this. If we just looked at this, then we would be thinking very positively. But given the momentum that we're seeing and the pattern that we're seeing in the momentum and all the other factors that we talked about today, it really does look like we're topping out right here, or at least temporarily. I can't say that this is the absolute top before we make a change of trend, but at least for now, it's going to be difficult for us to get above the psychological resistance. It's chopping sideways or pulling back, challenging this uptrend line again. And if we do that, then we evaluate very carefully at that point in time. We throw on some hedges just in case this is the time that we break through, or we chop sideways into the trend line and either we move upwards or we move sideways or down through that trend line. And again, we would put on some hedges. If we did it that way, though, we wouldn't put on as heavy hedges because we could just keep chopping sideways through it. So overall, the picture is not that different than last week or last Friday. So we're just going to play it the exact same way. We want to go, if we're long, we want to be long in very specific sectors. We want to balance it out, and we don't want to take huge risks right now. If you say, hey, this just looks like a really great opportunity to the upside and it's amazing and I want to invest, go ahead. But personally, I would, if I saw anything like that, I'd be going in smaller sizes than usual. That's another way to protect myself. So we're getting a pretty good picture. Let's see if futures, or if we moved a little, we pulled back. So we had that surge upwards, we pulled back. So it really is looking like some chop sideways and difficulty getting above that 510 today. I could be wrong. Like the market could surprise me and move upwards with gusto above that 510 line, but I'm not seeing any evidence to make me believe that. So for now, I'm sticking to what I see, which is it's going to be hard for us to get above that 510 today. Right, so we're only 5 minutes to the market open, so we'll leave it right there and have a wonderful session. I will see you in the aftermarket.